Happy Friday, traders. Thanks for joining me. It's Friday, um, June 13th, 2014, 8 a.m. Chicago time. It's also a full moon, so it should be an interesting day if you believe in that sort of thing. Trading futures, options on futures, and foreign currency involves substantial risk of loss and is not suitable for all investors. My personal opinions, market data, and recommendations are subject to change without notice. Past performance is not indicative of future results. A quick rundown of the news overnight. There was plenty of it. Um, for Europe, the Bank of England's Governor Carney says that the MPC could raise rates sooner than the market expects. That's huge. Case for rate hikes more balanced. And then from the BBC, a gentleman named Peston, this is kind of like our Wall Street Journal's Hilsenrath, somebody who watches what the BOE is doing, says that rate hike seems likely at some point this year, probably 25 basis points in size. Why is this important? Why am I bringing this up? Central banks for about the last, I don't know, maybe 12 years or so have been really competing with each other. There's been a currency battle in between sovereign countries, and the fact that the UK is considering a rate hike could have an effect on what everyone else does. So this is important that a major central bank is considering raising rates this year. Yesterday, the U.S. had a very strong 30-year auction bid to cover at 2.7 times. So that was interesting to see the market kind of pick that auction right up. The U.S. Senate confirmed Brainerd, Fisher, and Powell, Fisher being vice chair of the Fed. Fitch says that Japan may be a credit negative if Japan gives up on the fiscal reform, notes there is no plan B to bring down the deficit in Japan. Some concerns there. So Fitch is looking at a potential negative downgrade. China May retail sales beat 12.5 versus 12.1 year on year. Wall Street Journal says that Iran is deploying elite forces to Iraq to aid the government against rebels. Boy, a huge mess there. This is a theater that needs to be watched. Could have a tremendous influence on the markets. Could bring the U.S. back in. I was watching a show yesterday where they were talking about $18 billion worth of equipment and training to the Iraqi military, and when crews got into the cities that are supposed to be defended, they had attacked Mosul and Tikrit, which is Saddam's hometown. They found that the uniforms that the U.S. supplied on the streets, they just took off their uniforms and ran, and U.S. Humvee equipment and so forth just being abandoned. So it's just that this could get really ugly. The White House says the U.S. is not considering sending ground troops to Iraq, looking at steps to assist Iraq, including drones. The Baji oil refinery remains in government control. The UN envoy says that the UN sees a fall of Baghdad as unlikely, no immediate danger of violence. Not sure how that could be said given the fact that these are armed militants. Intel came out with a boost on Q2 yearly revenues and gross margins. Cites stronger than expected demand for business PCs. Stock is up 6% aftermarket. So that's what I saw as the key stuff. Remember, Intel influences the Dow, the NASDAQ, and the S&P. It's present in all three. As far as news coming ahead, economic releases and so forth, 8:55 a.m. Central, University of Michigan, 83.0 expected. Let's have a look at what we did yesterday. Now remember, yesterday was rollover. I rolled to September yesterday, despite the fact that many people think that believe that you shouldn't roll until the volume moves. But the volume starts moving yesterday. The official exchange rollover date was yesterday, and I roll with the official date just to keep things simple. It doesn't make a difference to me really where the volume is, as far as who's got the more volume and so on. So the prices that you see here are going to be September prices, as it says up here, September 2014. So everything's been adjusted. All of my prices going way back, composites and everything, did a full download from IQ Feed, my data provider, to adjust everything down. I believe the adjustment is 7.25 points. Everything moves down in September, 7.25 points, to equalize prices, and the levels also move down 7.25 points. So this is what you're doing in front of you. So let's look at yesterday. Up my trigger chart. This is yesterday right here. Okay, this is a 2-tick Renko. Essentially, what the market did yesterday was it opened. It was an open auction in range, two-way auction. There's really no driver here, as you can see in the delta. There's really no strong driver here. The opening swing was 34.75 to 30.50. Market falls 3 ticks out of prior day's range. The initial test, note that the initial test was up at the value low of the prior day. So what the market did is it opened, it tested the value low of Wednesday, failed to do so, tested below the that day's range by 3 ticks, comes back in, tests the open, again tries below the prior day's range. Just looked kind of bullish to me early on, and then it retests the open and fails to do so, and now we have a lower low. So here's a test up, low, lower highs, higher low, higher high, and then boom, breaks the low, and then from there on out it's being held down by the mid and VWAP. Initial test brings us down to about the mid of this LVN. And remember, I had mentioned this several times, from the 5th of June, a break below what used to be, this used to be 36.50, 36.25, now it's 29.50 in a September contract. From there down to 22.50, we have a low volume node. There's very little volume and a very poor auction that occurred here in these zones, and I had mentioned several times this week that a break below creates a decent opportunity at a test of 22.50 at least. And what the market did is it came down and tested the midpoint of that LVN zone, which was 25.75, stopped at 26.50, tried to get back into the prior day's range again, failed to do so, and then the sellers came in to push it through the LVN zone. And then the initial test beyond the LVN zone was the high volume node right here at 1920. You see that bounce right at 1920. Market sits sideways, and then we have a point of control shift later in the session. It attempts lower and then finds buyers to finish towards the mid, but really at the lower end of the zone. The market has moved more than twice the range of the IB. This is a trend day type. Okay. Retested prior day's low and failed to back out. Low seems secure short term, so this low here to me seems fairly secure. There's pretty good buying participation at level. Right here, it does not taper as nicely as we'd like to see for a strong low, but it did get a pretty decent bounce. The low seems short-term secure. The high is a secure high. You could see as the market tested higher in the morning, very strong taper in volume. Okay. So overall, the market put in a lower point of control. So here's the point of control from Tuesday, down to the point of control from Wednesday, down to a point of control from Thursday. Trend is down, lower highs, lower lows, point of control lower. We left a gap and a naked point of control for the last 2 days. There's just no interest higher, which is a nice change of pace for day trading. And so that's what we have. Very wide value range, which is invalid. I would not lean on these value ranges at all. It is, after all, a trend day, and by definition, a trend day is a day that kept moving in one direction to find value but could not find value. So it put in a point of control down here. I thought I'd mark this. No, that's the wrong part. Yeah, okay, I've marked. The key area this morning to test is right here at 25.50.26. The overnight high is 26.75. Let's look at the overnight session. Where's my overnight chart? Where art thou? I was just looking at the overnight session. I can't find that chart. Oh, here it is. So the overnight session had a 7.75 point range, pretty decent range. Nice test of the initial low of yesterday's 26.50. So what the market did is it tested lower to 20, this 20 that I talked about earlier, which was that HVN from the 5th. Retest there, a push to 26.75. It tested this low, 26.50. That we put in mid-session yesterday, and then rolled over to make a lower low. It has a very weak high on this session, so the expectation is for this overnight high to be taken out on the day session. We have about 18 minutes, 17 minutes for the market to open. Balanced profile overall, mostly around yesterday's point of control, so the market's accepting yesterday's high volume zone, and a pretty good low so far. The volume is still low, relatively low on this session. I checked the June contract as well. Volume is relatively low there too. It's not a rollover issue. And overall, it looks like we are likely to attack higher on the open before we test lower. Overall, the impulsive move that occurred yesterday was right here, and it was followed up by a completion move here to 1917.50. The target below 1917.50 was 1916.75, which is a key LVN, composite LVN in this zone. Also, because we have rolled over and started to trade over old prices, we have a new composite. So we have a new micro composite that starts on the 27th to track all of the volume that has occurred since the gap. It doesn't matter where you start it. We could start it back here if we want, or whatever, but I started it with the gap zone, and it shows us what areas have been tested and what areas remain to be tested. So here you see that 1675 LVN that we almost pushed into. A break below that LVN brings us to the point of control for this composite, which is 1450. 1450. And if the point of control does not hold, then the next test area will be 1907, 1906.50. So that's how it works. In general, the market auctions down to an LVN, takes a breather, and if it cannot find the buyers, then it'll break through the LVN, goes to the next highest volume price or the most accepted price. Then if it does not find buyers, it'll start to gyrate lower, goes to the next LVN, and so on and so forth. Think of a wheel being pushed up a hill. The first time it tends to roll back unless it finds energy to push it to the other side, and when it does, it finds the bottom of the hill again, and so on and so forth. And that's generally how the market auctions. Not always, but that's generally how it auctions. And all we're doing is checking to see the quality of those tests and where it fails. and what tracks it keeps behind. There's a reason there's volume at certain prices and there's no volume at other prices, and that's what we keep track of. Okay, that's what volume profiling is about. So that's that. As far as the hypothesis for today, the expectation is for an early test of the overnight high given the weak high overnight, and I'm looking for a test of the top of the LVN zone as represented here in the composite. So I'm looking for an early test of 29. If 29 finds sellers, then I expect it to fall back through to 25.50 and then to start moving towards yesterday's point of control, 22, and then you have your Friday afternoon chop between 22 and 19.20. So my primary hypothesis is for a push higher on the an attack on the overnight high to satisfy the overnight stat, and then I expect resistance to show up around 1929 or so for a rotation back down, and then for it to drift back into yesterday's value. So we will have retested, properly retested that low volume zone. The auction down yesterday through this low volume zone was actually a two-way auction. It was a good balanced auction as it fell. So I'm not too concerned about it kind of blowing through this. I think it's more of a calculated push up into the 29 area. The next line of defense would be the 30, 50, 31 quarter over the range of Wednesday, and then yesterday's low, early low. If they don't find any sellers up here, then the plan changes towards targeting 1936 and 1936.50 for the gap and the VPOC, and then that gives us a pretty good range, 12 points for the day. Upwards, which is not very common, or it's a little more difficult for the market to achieve higher ranges. Pushing up, it's much easier going down. So that's really what I'm looking for the market to do on a primary basis. On a secondary basis, again, I expect at some point early today the overnight high to be taken, and if it fails at the overnight high, then I'm looking for 22.20. And then ultimately 16.75 if it has any selling power at all. 1916.75 is the target below. Okay, so there are other variations on that. Test higher, test lower, chop in the middle Friday, and it doesn't go anywhere. There is headline risk that has come into play with Iraq, which has a strong potential of pulling the U.S. back into that conflict. I know that we still have assets over there, and that we're probably already doing things to try to calm the situation or try to control the situation. But this could have an effect on oil prices, which has an effect on the cost of production of many consumable items. A sort of tax on the planet, and you saw the movement in crude oil already. Okay. In closing, the one thing I want to talk about is, you know, I got a great question from Tom by email saying, well, if you're following volume profiling and you look at yesterday's volume, it's 344,000 in the September contract. And in the June contract, the volume was much higher. If you're following volume profiling, shouldn't that matter to you? And it really doesn't, because my view on how the market operates, like how these high volume nodes or low volume nodes are formed, does it make a difference to me that, for example, let's stretch this out so we can look at the numbers. Does it matter to me that this HVN only had 8,800 contracts in it, or does it really have more like 16,000 contracts in it? Ultimately, yesterday's profile looks like, in the June, looks like the September profile. I'm not too concerned about how much volume there really is. I'm more concerned about the shape, and this is just one day in the mix of things. Everything rolls on Thursday, and I just go with it. I refresh my data and just roll with that. I don't believe that having most of the volume today is going to be in the September contract. I don't believe that having this low volume day here with only 300, yes, it does skew the numbers a little bit. It skews my 20-day median average volume, and so on and so forth. But it's just like trading. Just the one trade does not make or break the account, unless of course you let it get out of control. But we're looking at the sum. The whole point of volume profiling is to look at the sum total of everything, and looking at things holistically as opposed to just small parts, a moving average here or stochastic there. We're looking at the market as a whole. So I wouldn't be too concerned about it. It does not, having the low volume profile here gives us smaller nodes on the composite than if we had used June, for example. But it really isn't that significant. Just like overnight volume is not creating an appreciable addition to the day session, and that's why I only use day session charts when I'm doing my analysis. We do review the overnight session to see if we can gain some clues from it, but I don't need the volume from the overnight session to see where the auction is. And this is something that, I mean, if you've been following for a while, you see how the market hits these levels over and over and over and over. It's in a very predictable way. For example, this 31.25, which was the former 38.50, just goes right to it and bounces right off and stuff like that. The market has this memory, and having a day with low volume doesn't really change the big picture a whole lot. It changes it a little bit, so I'm not saying that it doesn't matter. That's not my response. My response is I'm not too concerned about one day having low volume. It's just one day. But if you need to be accurate and have to have accuracy, then you need to figure out how to integrate or inflate September's volume from yesterday to be more in line with what happened in June, and I'm not interested in doing that exercise. It is Friday. It's the end of the week. If you are someone who's conscientious about your growth as a trader, then you should have set goals early in the week, and you should be checking them this weekend. If you're not doing that, then you're not guiding your growth. You probably don't have a coach or mentor or so on. So you are your own mentor, and the first thing a coach is going to do is they're going to grab a clipboard and figure out where you are so they can figure out where you need to go. And if you're not doing that in your trading, then your energy is not being guided in the most efficient way. So it is Friday. It's the end of the week. We measure our performance weekend to weekend to weekend, not trade by trade by trade, which is more common. Oh, took a trade, took a loser, took a trade, lost 3 times. I'm terrible. What should I do? I want to leave, but I don't want to leave. That tick drama that a lot of people get sucked into emotionally. We measure things by looking at the end of the week performance, and then we accept where we are, and then start to formulate a plan for next week as far as goals that is based on where we are today, not where we want to be. Hey, I want to be up 200 ticks in the S&P by the end of the week. Well, this week I'm down 12. That's not a realistic goal. How about next week you're just flat? So that sort of thing. So you should be tracking your performance. The other thing I wanted to remind everyone of is that it is Friday. Don't get pulled in. Be patient. Do not take a huge hit today. You have to live with it throughout the weekend. Good luck, and I'll catch you next week. Take care.